Bull versus bear with regard to LIC, at least I was waiting for it. So let's quickly start off with regard to what the first bull case is on an LIC. One, it controls more than 60% market share in the life insurance space in India, so has a very, very large market share and is a market mover, no doubt about that, has done so for many, many years. But the growth in Q4 is weak. You want to see LIC pick up in terms of market share, or at least hold its market share. That doesn't seem to be happening. They seem to be letting go of market share. So that's the bear case. Let's talk about the second key piece in this. The value of new business margin has increased by around 152 basis points on a YOY basis. So we've seen a YOY growth of 152 basis points on the value of new business margin. However, you're looking at absolute value of new business, the number of 3,500 crore, which came in for Q4, is well below estimates, at least as per our polls. Let's look at the bull case. The third bull case is there's a strong pivot in product performance as well as margins. Now, LIC has guided for this consistently. Since the time of listing, they've been saying, we will improve margins, we will increase our non-par, and mind you, non-par, or rather non-participating products, which is 7% of the mix for LIC at the time of listing. They hiked it to 9% in just 2 to 3 quarters, and there were plenty of skeptics that they cannot hike that. Now it's sitting at 28%, at least on the individual policy side. But they continue to consistently lose market share despite this strong pivot with regard to product performance as well as margin. So we've seen that, but at the cost of market share, and that's where the bear case lies. Now let's talk about the fourth point with regard to bull. Relatively undervalued. It's currently sitting at 0.75 times price to embedded value, and this is after today's rally. So that's the kind of valuation you're looking at when peers are valued at maybe 3 or 4x the multiple that LIC is valued at. But your return on embedded value is just 6.8%. Your peers generally, something like an HDFC Life, likes to double their embedded value every 3 to 4 years. So that clearly is a far cry, but nonetheless, it's valued very reasonably. Let's look at how analysts are looking at it. 16 out of 20 analysts have a buy call. There is a 15% upside even from here. So 20+% upside versus yesterday's close that analysts were seeing on a life insurance corporation. The government owns 98%. So there's a large stake sale overhang which has to happen. Of course, there's still time for it, but that's of course the bear case.